retire comfortably. What we see in most cases is that by the time people retire at the age of 65, their quality of life deteriorates significantly. They might have worked for a number of years, but by the time that they are asked to retire, they cannot maintain their quality of life. Some of them would need to move into a smaller house, significantly downgrade because their income levels go down. And so I was reflecting on why that is the case. What are some of the 6 retirement mistakes that people make? And the reason why I'm highlighting these 6 retirement mistakes is so as to help all of us. Some of us may be going through your peak years of earning income. And so you need to avoid these 6 retirement mistakes. Mistake number 1 is procrastination, delay when it comes to building your investment portfolio. Many people procrastinate quite a lot. So sometimes we run financial education shows such as this one, and we advise people set aside at least 10% of your monthly income towards savings and retirement, at least 10%, and increase that percentage progressively so that you are able to have a retirement portfolio by the time you retire. But what we find most of the time is that people procrastinate. At the end of this show, if you're listening to us, don't procrastinate, because that's a retirement mistake that many people make. The second mistake is inadequate savings. So what normally happens is that by the time people retire, the money that you have saved over time is not enough to sustain you. And I can almost guarantee you that whatever you're setting aside as part of your pension fund arrangement will not be enough to sustain you up to your 80s or your 90s. Most people run out of savings. So how can you avoid this? When you start working, if you're a young person, get into the habit of setting aside 10% of your monthly savings towards retirement. This is over and above what your company is reserving for your pension fund. So at least 10%. And as you earn more, increase that percentage to 15 to 20% and have a retirement portfolio of your own. Mistake number 3, lack of diversification. What we see most of the time is that even when people build their retirement portfolio, they put all their eggs in one basket. So you will have somebody who says, I want to start a business. And then they take all their retirement savings to invest in this business opportunity that has presented itself to them. And then the business fails. And then they lose all of the retirement capital that they have. The key to financial progress is diversification, which is why we started on a note that said you need to be very careful about your asset allocation. I think I gave you an understanding of what the top 1% of people that invest on the Easy Equity platform are investing in. They allocate their capital towards ETFs, towards crypto, towards stocks, and towards different asset classes. And that's what you must do as well. In the money that you are setting aside on a monthly basis, just make sure that you are adequately diversified. I would want to see cryptocurrency in your portfolio. Listen to our advice, not more than 5%. I would want to see stocks in there. I would want to see alternative investments. Just make sure that you are sufficiently diversified. Don't put all your eggs in one basket. Mistake number 4, ignoring or underestimating the risk of inflation. Never forget that as you prepare yourself for retirement, as you build your retirement nest egg, your greatest enemy is inflation. even when you embark on your entrepreneurial activities, you've got, in fact, I always tell people that you've got three enemies. You've got three enemies, but your greatest enemy is inflation. The other enemy is costs. So you need to manage your costs very well. And then enemy number three is taxes. You need to make sure that you manage your tax affairs very well. But what I find most of the time is that people ignore or underestimate the risk of inflation. Inflation is an enemy against wealth accumulation. And that's the number that you need to be always watching and making sure that every month, every year, you are ahead of inflation and you are beating inflation. Because if at any stage of your life you are behind inflation, that will impact your retirement nest egg. Mistake number five is chasing short-term gains. You need to have a long-term outlook when it comes to investment. The kind of investment mentality that many people have is one that is characterized by short-termism. I call it short-termism, the desire to make a quick buck. That's why people fall for these investment scams that are promising that you will double your money in a month. That short-termism has killed people. Many people have lost money trying to make a quick buck. When it comes to accumulating wealth, just treat it as if you are running a marathon. This is not a short-term sprint, it's a marathon at the end of the day. And so the mistake that many people make, which results in 6% of the population retiring comfortably, is that your retirement journey or your investment journey is characterized by you chasing short-term gains, have um, a long-term outlook. When we talk about short-term gains, we are also talking about people panicking sometimes when their portfolio suffers short-term losses. There will be instances in your investment journey when you will have downward corrections in the price of your investment portfolio. Don't panic. Uh, Fear and greed are some of the emotions that impact on people on their investment journey. So we've always spoken about managing those emotions and making sure that you do not make investment decisions out of fear and that you do not make investment decisions out of greed. Make sure that you control your emotions. And then mistake number six, neglecting to review and rebalancing your portfolio regularly. Here is the thing, beloveds. Gone are the days when you will invest and then watch your investment portfolio as it grows. There are so many shocks, there are so many things that can happen to your investment portfolios. Some of the companies that are doing well may not do well in the future. So, what you need to do, and I do this every 6 months, I review my portfolio, I rebalance my portfolio depending on whatever is happening at that time. So, you need to always be watching your portfolio. And so here is my advice to you. You know, many people set New Year resolutions, New Year goals at the beginning of each year. Make it a habit that one of the things that you do at the beginning of the year is to look at your investment portfolio, set new investment goals, and rebalance your portfolio so that your portfolio is able to achieve the retirement goals that you are pursuing. So those are the mistakes that many people make, Tafadzwa, and which account for the reason why at the end of a working life, at the end of an income earning journey, only 6% of the people retire comfortably.
During the week, I got